In this video, I want to speak about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the on-chain data, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the macro movements here on the chart, what we can see is that we do have a quite strong level of previous monthly resistance, which is now turned support, which the market has in fact just tested and started to reject to the upside. Now, this is exactly the previous cycle high. From here, all the previous bear market had developed. Here, we had the halving, the market entered into a bull market. Then we had the bear market. And here, in my opinion, this is the low of the current bear market. I do not expect the market to create a new lower low. I expect this to be the low of the current bear market and the market not to drop lower than this. Now, at the same time, I also don't expect the market to create new all-time highs before 2024. Only after the next halving in 2024, only at that point, I expect the market to create new all-time highs. Now, if we drop down here on the weekly time frame, what do we have? Now, from a weekly perspective, I did speak about BTC USD last week actually, and I explained all the reasons for which when the market was here, I expected a move to the downside for a stop hunt of all the stop losses that were below this low, and then I expected the market to create a rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. Now, at the moment, since the market has created a new break of structure to the upside, we have to reevaluate what kind of levels we have here on the weekly time frame, and it is quite clear that the most important zone is this previous weekly resistance from which this move to the downside was created, which is now turned support here. Because as the market is breaking above the zone, what we could expect at this point is a retest of this previous weekly resistance turned support before then getting a potential rejection to the upside. Going down on the daily time frame, what do we see? Now, from a daily perspective, we can see that in all this move to the upside, there is one candle not related to the move, which is exactly this red candle here, which is previous daily resistance, which is now turned support. And what we could expect here is a potential retest of this previous daily resistance turned support before then potentially getting rejected to the upside. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see here is that this is the exchange reserves, which is the purple line that we see here on the chart. The black line is the price. What we can see is that while price was dropping, the amount of Bitcoins on exchanges was dropping even more aggressively. This was showing how a massive amount of addresses were buying Bitcoins and then moving them away from exchanges, possibly in cold storage. What this shows is that there is massive illiquidity in the market, so that if demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving, at that point price should increase to accommodate for this new demand. So the fundamentals for Bitcoin are very strong. So if we do retrace to this zone and go and test this previous resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure to drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.